Do elections actually even matter?
So for market, on the result day, elections matter. And after result day, the work done by the government matters. In 2004, market was expecting NDA government to come back. Didn't happen. It crashed, closed the market for trading for that day. But post that, we witnessed one of the biggest rally of our lifetime, where Sensex moved from some 4,000 to 21,000 between 2004 to 2008. In 2009, market was not expecting UPA government to come back with higher seats. It happened. It again went circuit up and locked down. But thereafter, the returns were moderate as we fought, variety of things, including 2013 taper tantrum. 2014, somewhere in mid 2013 itself, market started discounting India government. It was going up from September 13 onwards. And on the result day, when they saw first absolute majority government in a long period of time, again, it went further up. So it's all about on the result day elections matter. After that, the fundamentals and the work done by the government matter.
So actually, I think my takeaway from what you just said is that investors should not spend too much time predicting on what results will come, because if it is such a small, let's say only the result week or result day is what it matters, then why spend time?
Absolutely. Anyway, we have no special ability to predict election.
Yes.
The collective markets in last 4 attempts have been wrong twice and right twice. That's like toss the coin and half the time you will get head or half the time you will get tail. So there's no point in wasting our time on trying to figure out what results will come. We might as well focus on which stocks, which sectors will do well. And then if there is a surprise or shock in the market, we adjust our portfolio accordingly.
Okay, so I'll come to that, but on staying on this elections topic, so 2024 is going to be a heavy election year in the sense that now we are having Indian general elections, and then end of the year we have US elections also. I think possibly, at least in my memory, this looks like one of the most bitterly fought elections in the US. And there is strong bipartisanship both sides of the aisle. Do you think if there is a change in government, let's say Republicans come back, Mr. Trump, whatever legal issues he's having, he's able to circumvent that? Do you think we are looking at some major reset of global equations?
It's very, very difficult to predict what Mr. Trump will do. But at the end of the day, in politics as well as external relationship, interests are permanent, not the
friendships are
friendships. My feeling is that today, there is 2 cohorts, one led by Russia, China kind of autocratic countries, another led by liberal democracies like US and Europe. Now, India is growing much, much faster than US and Europe because of smaller base, but has the same liberal democratic values. If we align ourselves with US and Europe, chances of us setting an example for rest of the world that even a democracy can deliver better growth will get established. On the other hand, if we align with Russia, China, chances of that block's success and setting an example for rest of the world will go up. 2 autocracies, 1 democracies. I think it is in the interest of every democratic country to come together and set an example of better growth and governance for rest of the world. And hence, my feeling is that the Western cohort will continue to engage with India. They will realize our value and importance which we bring to the table. And on the other hand, hopefully we'll be able to maintain good relationship with Russia and eventually China, so that we create a more unipolar world, but a more stable world rather than bitterly competing world.
What we have seen over the last 10 years is increase in protectionism, right? And China, when it grew its manufacturing base, which obviously all of us know, it was dominated by exports. The world was relatively more benign and the trade barriers were relatively less pronounced. What we are seeing now is all countries have realized that if you just keep on importing, at some point in time, your economy will be kind of, there would be very little future hope left for your own economy. Now, India, we are talking about making India as a manufacturing hub, and obviously there are some great policies which government has, started like PLI, etc. If trade barriers go up or protectionism go up, even if the government or the economy has all the right ingredients to create a manufacturing base, would we be able to have the market access which China had, let's say, 20 years back?
So undoubtedly, China grew in a benign kind of, let's say, less protectionism environment. But the fact remains that they are the most competitive producer. In this case, India should follow the एक शेर था, खुद ही को कर बुलंद इतना कि हर फैसले से पहले खुदा पूछे बता बंदे तेरी मर्जी क्या है. If we become cost competitive, if we have technological edge, then despite protectionism, we will be in a position to supply to the rest of the world.
How do you see markets, broadly? There are pockets of overvaluations. Everyone says small mid cap is, there's a lot of frenzy. Large cap, again, some sectors doing well, some sectors not doing very well.
So there are three sectors where they are trading below historical averages. The whole market is little above historical average, and there are sectors which are way above historical average. But these three sectors are trading below historical average for right reasons, and hence there could be an opportunity there if those reasons change. The first sector which is trading below historical average and which has been derated over last 2-3 years is consumer FMCG and durable. We believe there will be good monsoon, above average monsoon as predicted by IMD this year. That should support rural economy, and that spending will lift FMCG and durable demand. So there is time probably to accumulate consumer FMCG and durable stocks with the anticipation of monsoon leading to better rural economy. The second one is IT sector. It's been derated in last 18 months as volume growth didn't come. They actually retrenched about 60,000 plus people in last year. But this year they have given appointment letters to kids in engineering college. Now those guys, if they really join the business, then we know that volume growth is coming. Otherwise, they would not have recruited so many people. From a top-down basis, globally sales cycle for IT orders has got elongated. What was from RFP to order about 6 to 9 months is now 12 to 15 months. Could this result into bunching up of orders? That again could support volume growth. Now, if engineers start getting placements in the office and globally order conversion cycle becomes shorter, I think IT will be a good bet to have. And finally, there is private sector banks. They are trading below historical averages. Names have come down, but valuations have come down further. We believe compared to the valuation now, it's an attractive opportunity. Names will continue to come down, but not as sharp as before. Deposit and credit growth will remain in double digit. NPA cycles are fairly stable. Net from a valuation point of view, banking, especially private banks, could provide an opportunity. So these are the three sectors which you can play out from a valuation point of view.
Isn't PSU sector in that euphoric or euphoria zone?
So within PSU, there is two extreme. One PSUs where there is reasonable floating stock. That means there is more volume and better price discovery. There is another PSU cohort where floating stock is like 3%, 7% of the total capital. It's concentrated, there's limited volume. A small amount of buying can pull the price higher. So within PSUs, don't go towards low floating stock counters, go towards where there is more volume, where there is higher floating stock.
And this is why if I think slightly more macro top down, so between let's say large cap, mid cap, small cap, how should I think about the market?
So normally the curve is like this. Large cap valuation highest, mid cap little lower, small cap little lower, micro caps even
अभी तो
lower.
inverse हो गया.
Now ऐसा curve है. Micro caps highest, then small cap, then mid cap, then somewhere large cap. Now this kind of curve inversion does not last forever. There is more mortality in micro caps and small caps, more predictability in large caps and mid caps. Purely from a valuation as well as risk return point of view, I think this is the time to be overweight large caps and larger mid caps and really do solid profit booking in micro caps and some of the smaller caps. Yesterday only, Mr. Harsh Goenka tweeted about how in certain segments in Eastern India, there is inflation of profits and a cohort working to pull the prices up.
He was remembering 1992, I think.
Absolutely. Now, we have seen in 1990 what had happened. If those pain has to be avoided, this is time to be focused more on large and larger mid caps.
One last thing before we go, Nilesh bhai, any view on interest rates? I think US Treasury again went all the way up to 4.5%. And doesn't look like, I think the year started with 4 cuts, 3 cuts, 2 cuts, abhi to 0 cuts ho gaya. So, do you think there is some hope of any major interest rate cuts? Maybe 1 cut, it doesn't matter actually. 2, 3 cuts, do you think it's happening?
So in US, undoubtedly, market's expectation about Fed rate cut has been belied. It was earlier starting in mid-23, now it is probably beginning 25. So you have been pushed behind by 18 months over last 2-3 years. That rarely happens.
And I think, sorry, I'll just interrupt. I think you keep on tweeting about it. The kind of decimation in office prices, real estate, which has happened is unprecedented something.
Absolutely. Now, why is this happening? Because the United States of America has become fairly fiscally supportive. Their deficits are running into trillions of dollars. The debt creation is now running into trillions of dollars. This year, the interest payout itself will cross $1 trillion. The debt is already in excess of 34 trillion. So this kind of, interest rates were putting a brake to stop the car, but fiscal stimulus created escalator and car still kept on moving, and hence you couldn't take your feet off the brake. The day US fiscal stimulus unwinds, then certainly Fed will be looking to cut rates. Fed will be data driven. Our feeling is that rates go up on escalator, but they come down on elevator, sharp. But the button of the elevator is in Fed's hand and they can't press it unless until fiscal stimulus of US government winds down.
But fortunately, I think India in some sense has managed its both fiscal and monetary policy beautifully. So
absolutely,
this entire rate hike cycle, you mentioned 2013. I was in the dealing room then. The kind of just by talk of a taper tantrum and the way markets behave versus now actual rate hikes, and that too by so much, and virtually nothing has happened to the market.
I think RBI has done a commendable job in navigating Indian economy. They took out liquidity of almost 10 lakh crore before anyone realized. They raised interest rates proactively, and today they will be envy of the world. Growth is one of the highest in the world among major economy. Inflation is under control within RBI's target range and is expected to remain stable and soft. Growth is expected to sustain. Currency is stable. Banking system is stable. What more one can expect from the RBI?
Correct. So I think on this happy note, very nice to meet you, and we'll catch up after the election. Let's see what you mentioned on the election day. Market went up or went down. Let's see. We'll catch up.
Let's hope and pray, and just ensure that you go out and vote.
Yeah, absolutely. Very critical. So just 2 phases have gone. 5 phases are still remaining. So all of us have to do our saving duty. So thanks again, Nilesh bhai. Absolutely a pleasure.